Bandhan Mutual Fund presents MF Corner.
Hello and welcome. You're tuned into this Mutual Fund Corner YouTube edition. It's a special conversation that we are going to have today because while we are talking about investments rising in the mutual fund industry, it's very important to understand some of the red flags that you should avoid when you're looking at a fund, at a category, and a lot more, and in investments in general as well. Today, joining me is Arun Chulani, the founder of First Water Capital. Arun, always a pleasure speaking with you, and thank you so much for joining us today. And you know, that's the most basic questions, because while we are talking about where to invest, sometimes it's very important to understand where not to invest. So what, according to you, would be some of the red flags that investors should be aware of, be it in any category?
Sure. Well, it's certainly a pleasure to be here. And the kind of red flags you should be looking for, generally, it's high churn, it's high fees, various aspects like that. And you really have to look at a fund manager from a long-term perspective. Essentially, you have to look over maybe 5, 10, 15 years, because anyone who's been in the market for around 3 years is generally everyone is looking like a rock star today. But if you recall back in 2009, Warren Buffett said, it's only when the tide comes out that you'll know who's been swimming without any swimwear, or words to that effect. So it's really how they reacted to different situations. And that is really the key of picking your fund manager. Essentially, how they reacted to bear markets, downturn cyclicals, and even stagflation. So it's really those who've been under all-weather type situations where you'll find a really good understanding of how's your manager going to react. And yeah, I think that's very much the key, is looking for the right manager. You also want to avoid high staff turnover, because of course the person who's done the track record over a period of time that you may be impressed with, maybe the fund manager's left or the key analysts have left. So you want to see, is there a good stickiness within the team? How well do they work together? And essentially, you know, are they rightly compensated, and all these other aspects to ensure that this team is continuing into the long term.
Okay, all right. Take that point. And while we are talking about the number part of any investment, it's very important to understand the behavioral part. And as you said, fund manager, that comes in as an important trigger or factor while investing as well. Where does past return come in this picture, Arun? Do you think if past returns are good, it's good enough of a factor for an investor to go ahead and invest?
Again, it very much depends on the timeline. So really, you want to see at least 10 years. And unfortunately or fortunately, you know, there have been very few violent times or long-term protracted bear markets. You can see from COVID itself was a very short-term pain period. Of course, again, you have to see 18 and 19, and you've got to check with the fund manager, is he sticking to the same philosophy? So I'd say yes, track is very key, but also seeing, is his philosophy being the same? Are the types of stocks he's picking the same? Is his overall process effectively the same? Or is he flipping and flopping in terms of his procedures and philosophy?
Okay. So, you know, once you do realize, Arun, that maybe you've made a mistake, you've entered the wrong fund despite seeing those red flags, is it prudent to immediately exit, or do you think it's time to be a little patient and then see if things change over time?
I guess you can answer that in two parts. You know, is it the wrong manager? It may just be a bear market. So you may be just impatient as an investor. So again, it's important to speak to the manager or his IR team and say, you know, what's happening at the moment? Because if the whole market is down and he's a long-only fund, it's likely he's going to be down as well. So that's not really an issue. If he's simply, you know, a byproduct of what's happening in the market, or is he out of kilter with his peer set? Again, is he a contrarian? So you really have to understand what is the philosophy behind it, what are the types of stocks he's picking, and try and pick one or two to see, is this fund actually a red flag, or effectively, do you have to wait out the cycle? So that's one part. But of course, once you've done your diligence and you said, okay, I'm not very happy with this, then yes, I mean, there's no magic bullet, but I would just suggest if you found too many red flags, then it would be time to redeploy into another fund. But of course, it's a learning process. It's better to do that process and then find the right fund for you.
Oh, totally take that point, and that's why we have experts like you on the show to make that easier for the investors as well. Arun, I wanted to dwell a little deeper on the portfolio churn part. What does it exactly mean, if you can simplify it for our viewers? And have we seen in the past a lot of portfolio churn in some of the funds or some of the categories by fund managers? And what has the result been in that case?
Sure. So what is portfolio churn? It's essentially transactional churn, but you can even look at name churn because some fund managers may be active. They may be active managers to ensure that they're de-risking on their winners, maybe buying into their losers, because intrinsic and extrinsic value are not, it's a very dynamic situation. Because when you pick a portfolio of, let's say, 25, 30, maybe 60 stocks in the case of mutual funds, you don't know who's going to move up first and who's going to move down first in your portfolio. So you may be looking to add or trim according to the price movement. So that in itself, just looking at churn and saying a high churn is unattractive, I would say it's not. The other factor you have to look at is name churn. Is he getting in and out of names? And why is that? So really, when you want to speak to your portfolio manager, you have to say, what is the reasons? What is his processes behind a high churn? Maybe it's over 50%. But if he's got a high name turnover, that means he's getting out of stocks that he's entering in. And again, you want to understand the reasons behind it. It may be that a stock has moved up, done quite well, and he said, I'd rather take the money off the table and redeploy. So again, it's really the reasons behind churn and turnover on both the volume-wise as well as the named-wise.
Okay, all right. That makes sense. Arun, thank you so much for joining us with your thoughts on this particular topic, because as I said earlier, it's very important to know your fund before you're investing somewhere. And as you said, it's very important to understand the fund manager's strategy in that case. Always a pleasure. Thank you so much for joining us today.
Thanks a lot.
Okay, all right. With that, we'll take your leave on this edition of Mutual Fund YouTube Corner, but stay tuned for more news and updates.
Bandhan Mutual Fund presents MF Corner.